Hey, welcome to another video. In this one, we're gonna dive into Fibonacci retracements, how to enter, exit, and how to build a strategy trading Fibs. So this will be a full tutorial. I'm gonna share a strategy with you, and later in the video, we're gonna build it within Profectus AI, where you can automate the strategy fully and then also backtest it in a few minutes over years of data to see how the performance is. With that said, let's dive into the trading plan first. Let me show you on the charts how Fibonacci trading works. It will be a beginner tutorial, and then we slowly take that trading plan and transform it to an algorithm without writing a single line of code. Let's dive into it. We are right now in TradingView. I'm gonna explain this trading plan step by step to you. What do we have here? We have a low and a high, so price is moving to the upside. And then we have a pullback and we want to enter with this strategy on 0.618, okay? We're gonna place a buy order at 0.618. We're gonna place our stop loss at the low, and we're gonna have a target of 1 to 5 risk to reward. We can adjust the targets, we can increase target stop loss. Like with automation, you can backtest your best stop loss, your best target, your management in minutes. So back in the days, 10 years ago, when I started with trading, I tested everything manually with just writing everything down in Notion, Excel, and all of that. And now, of course, we automate the trading plan, and then we can just ask the algorithm, find the best stop loss placement. Is it 50 pips? Is it 100 pips? Is it placing at this lower? What is the best stop loss placement? And also your management, how to manage the trade and how to target like a 1 to 1, 1 to 5, maybe target negative 1.27 like many Fib strategies offer, or just 0.27. Like you can all automate that and test it quickly, so you have thousands of backtests in a day instead of how I used to do it manually. It took me months to just backtest a few years on a few pairs. With that said, we enter here on 0.618. We placed our stop loss at the lows. We have a 1 to 5 risk to reward. What is next? Well, first we need to break it down. How do you actually calculate these values? Because before we can trade this, we need to know what values we are using. An algorithm doesn't have eyes, so you need to really tell it the formula how to calculate it. It is luckily super simple. Let me explain. You have this price low, that is 165, and you have this price high, 168, okay, and something. These two numbers are really important. We want to know the low and the high, because then we can drag the tool of the Fibonacci like this, and then we can calculate 0.618 and 0.382. Those are the two key values we need, and most importantly, that 0.618 value, all right? I'm gonna show you in Profectus AI what the formula exactly is, but we need to take this high minus this low, and then we have the high low. Let's call it that, the answer of that formula. And then after we have that high low, we can multiply that by 0.618, and then we calculate 166.847. If we have that, we have sort of a horizontal line, right? That's all price level is. And with that, we know, okay, where to place the buy pending order. Well, at 166.847, which is that 0.618 retracement. Cool. So you can trade Fibonacci in multiple ways. In upcoming videos, we're gonna show you how to really take these swings in the market. So you have uptrends, downtrends, and then swing highs and swing lows. And then you can draw the Fib extension or the Fib retracement tool over those levels. But to keep it really simple, what we're gonna do in this video, which already is a cool strategy, is we're just gonna drag it from the low of the daily to the high of the daily candle. Let me show you an example. So right here, currently we are on dollar-yen daily time frame, and we have this big strong candle. And after this big strong candle happens, I want to draw in my Fibonacci retracement tool and look for trades. So we take the low to the high, and then we have these values again, right? 161.81, and we have 160.476. We can calculate what 0.618 is, but for now, this tool already showed us obviously 160.986. So we want to place a buy pending order at that level. We reached that level exactly yesterday, and therefore we place our stop loss there. And then you can target the highs. That's something I tested. You can target negative 2.7 or 1 to 5 risk to reward, which for this example, we're just gonna use, and it aligns nicely with this extension, all right? So this is the setup. Let me show you in Profectus how this now looks. Right here we are in Profectus. I ran some backtests in the platform for you. One is here on pound yen. I have another one on dollar Swiss, dollar yen, and you can just test this on multiple pairs. For now, this is just a random setting, and I'm gonna show you how that looks. So here you have the full report of one particular setting. Of course, you can optimize this, make the returns better. Right here you can see how performance is during the day, what days to trade it, what sessions, long, short. Well, long is definitely the best thing here, and all of that, like a lot of different things you can analyze with the reports, and also you can see the charts. With that said, how do you build this strategy? Build with me. If you're totally new, this is a beginner video as well. So let me show you how this platform works. So we categorized when to trade, then we have trading rules, and then we have trading execution, trading management, variables, and chart drawings. Personally, I never draw things on the chart, but you have here when to trade. This means when do you want to look for a setup? When does your algorithm start? When do you as a person look at the charts to drag that fib tool, that low from that low to the high, right? That I just showed you here on TradingView. Well, let's say we do that every day at 2 at night or 1 at night. So after this daily candle closes, which is in the evening, 11 in the evening for me, and that's the daily candle close. So you know wherever you are on Earth, one day the daily candle closes, right? So after that, we want to start the algorithm. And the first thing the algorithm needs to do is at 1 at night, so during this daily candle, it looks back at candle 1, so the last closed candle, that is this one, and then it drags and drags the low and the high. But the algorithm, like I said, cannot draw things, so we need to do something at 1 at night, and that is find this high, candle high, 161.810, that value we need to have, and the low as well. Let me show you how that looks in Profectus. So we're back in Profectus. You can drag and drop the run at time block and then just define we're gonna use it at 1 at night or whatever time you want. For now, I of course did that already, and it is indeed at 1 at night. The second thing we want to check is if we have a strong bullish candle. Remember, a strong move in the market. For me, a strong move in the markets is a strong candle, so big body and a small wick. Let me show you on TradingView real quick how that looks. So we have here these imbalances, right? That's where the wick is very big and the body is smaller than the wick. That is one rule to categorize what is a strong day and a weak day. And then what is then a strong day? Well, a small wick up and down, comparing with that the big body. And this is the open, that is the close, and therefore this is a strong candle. Let me quickly practice with you. Strong candle, imbalance, 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 strong candle, and so forth. Okay, so what we want to see is a strong bullish candle or a strong bearish candle. At least the body needs to be bigger than the wick. Well, you can define that, right? That's a formula you can create. Back here in Profectus, you can see we have the candle total body size, so the open and the close price, that body. We have that, and then we have the candle total size, so that's the body plus the wicks. Okay, we use that from candle 1. And then how does this work? Well, at 1, we're gonna check if the candle body size in pips of candle 1, so the last closed candle, on the daily time frame, yesterday's candle, we're gonna check if that body size is bigger than the candle total size in wicks times 0.7. You can also do 0.5, but I really want 70% of the candle needs to be a body and 30% can be a wick. That's what we are checking here. You can adjust that value, optimize it how you want. By the way, you can drag and drop the block like this and connect it with yes. So at 1, this will run once, because that is what it does, run at time, at 1, and then it will wait until the next day. And then it goes to the trade rule block, and then it checks if the trade rule is valid, it goes this path. If it is false, it goes this path. Okay, so here at 1, we're gonna check, is yesterday's candle body bigger than its wick? Yes, okay, we continue. If it's answered no, next day we will ask again, because then we have a new day. What else do we do? Well, we need to store that high and that low, and we need to do something with it. So here I use the modify variable block, and I create a variable called high and a variable called low. If you don't know how variables work, you can click here on the big question mark below and go to our docs, ask our tutor, our AI, to explain it to you, share some articles about it or tutorials. But in a nutshell, what a variable is, if you calculate something, you write it down on a piece of paper, right? So you take the high minus the low is something, and that something needs to have a name, and that is a variable. That's like how I always define variables. So here you add new variable, and then in the blocks you can add the variable here. So I have high is, what is the high? Well, the high of candle 1. Okay, we need that information, remember, from the trading plan in TradingView. Then the low as well. So we take candle low and we want to store or save the low of that candle in a variable, the high and the low. If that is done, so this happens all at 1, right? At 1, we check that. If that's correct, a millisecond later, we store the high and the low of that yesterday's candle. If that is done, we move to the next one, and then the formula starts. So like I told you, we take the high, which is the variable high, minus the low. Well, we just found the high and low here, and that's candle ID 1 and the candle low, candle ID 1, which is last day's candle. So the high of yesterday minus the low of yesterday, we store that in another variable. You have to write it down somewhere. We call that high low. Then we take the high low in the next formula, so formula 2, high low, so the answer of this one, we use that here, times 0.382. We store that in high low fib 1, that's just another random name you can attach to it. Besides that, nothing happens. And then here you have high low fib 2 is high low times 0.618. Okay, so you take the same high low, that's fine. You multiply that by 618 because we want to calculate 618, but also 382. And then you store the answer in high low fib 1 and 2. So fib 1 already is 0.382. Remember, a fib 2 is 0.618. Then you're done. Then you move on, and then we're gonna check, is the candle close of 1 above the open of that candle? And this is just defining a bullish candle or a bearish candle. If it's a bullish candle, the close price is above the open because we closed the bullish. So you have the open price and then a bullish close, okay? If this is false, so the close is not above, is not greater than the candle open, then it's automatically a bear candle. You can only have a bear or a bull candle. More options are not there in the markets, right? Either you close above the open or below the open. If we close above the open, we go this path. We're gonna calculate fib 1, which is the high, minus high-low fib and nothing else. And that is the fib level. That is 0.382 level, okay? And fib 2 is a high minus high-low fib, and that's the 0.618 level. Now we have all the information. The algorithm knows at 1 at night, it finds yesterday's candle. If the candle is big and a strong bullish candle, then we calculate 0.382, 0.618. We already know the low, so we can also place the stop loss at the low. We can place the entry on 618 or 382 or 0.5, whatever you want. If you want to do 0.5, you just add that to this formula here. So you create one more and then times 0.5, and then you can also place your order there. Then the buy pending order, the last thing. We're gonna place at the open price, custom price value, we're gonna place it at fib 2, at that level, at that Fibonacci level 0.618. Like I told you, fib 2 is now 0.618. We're gonna place the order there. Risk, percentage of balance, 1%, stop loss, custom price level. What level? Well, the candle low of 1, okay? We're just gonna place it there. Take profit is a 1 to 5 risk reward, so 500% of the stop loss. And that is, a 1 to 5. And then order expiration, if the order is not triggered, we're gonna delete it. Otherwise it is always there. So we're gonna delete it at 9 in the evening. After you have done that, what you can do is simply test the strategy. So you can run it on dollar Swiss, you can run it on whatever pair you want to do, maybe GU, you want to test this, you click start backtest, and then it is running. Let me quickly wait. I'm looking for trades now, great, okay. I'm also gonna test it on, let's say, Aussie dollar. I'm gonna run that test, and that test is also running. In a few minutes you will get the result of both reports. You can now close down your laptop and wait for the results. You can change the settings maybe. You want to maybe have a different risk to reward. Just test it and you will get your report back. And that is the way how you find the most optimal way of trading. Thank you for watching. Next week we're going to use this concept and make it a little bit more complex. So take the strategy in the link below, go practice with it, and let me know in the comments if you have any questions.